What's up, folks? Just wanting to test the audio and also the latency. I think I kind of messed up the latency because I was supposed to put on low or ultra low latency so that there will be a little bit of it'll be more favorable for any kind of live streaming or conversations that I'm about to have. Let me know if I need to restart the stream. Let it probably populate for a little bit more before we kickstart the live stream. Yeah, so it's gonna be a very I think this particular episode will cover more on why you probably want to add high alpha or higher performing crypto assets to your portfolio. Now, this is just a personal. This is basically a personal opinion where how I've added cryptocurrencies occasionally to my existing base of cryptocurrencies, and I think for the past 3 years it has been relatively favorable. Hopefully, me sharing this isn't supposed to be meant to. It isn't supposed to be. It isn't meant to be financial advice. It's just basically me sharing my personal opinions on how having high alpha investments has helped me to build my portfolio over time and actually putting less of my own capital into the market and eventually being able to also cash out from the market over time. So let's just see whether the stream is populating properly. Probably only 2 people watching at the moment. Okay, so no worries. Let's kind of I want to start with the very basis of what is alpha. So alpha basically means that you want to have a base. You want to have a base or a benchmark, right? So in this case, usually within crypto, right? Crypto, I would consider it an asset class of its own. So within the asset class, there are the cryptocurrencies, there are the smart contract platforms, there's the data management, there's so on and so forth. But I think the three main industries at the moment that I feel are the strongest, or at least needs to really do well, are the cryptocurrencies, the smart contract platforms, and then there's actually one more, the exchanges, right? Exchanges have their own tokens as well, and exchanges also have their own mainnets, or at least intend to have their own mainnets. Whether it's going to be regulated or whether it's going to be regulatory facing or they're just going to be functioning more on an open source platform has yet to be made known. But I think exchanges have their own category as well. Then followed by the data management, or we call them the interoperability chains, right? Where they help one chain communicate with another chain. Usually it sits externally outside on their own, or they are standalone, right? They don't sit necessarily within the Ethereum blockchain or something like that, or the Bitcoin blockchain. So that being said, I think there are 4 main categories. So you always want to kind of put a benchmark. So the simplest and easiest way that I kind of want to do this is using Bitcoin as the example, right? So Bitcoin, we talk about year on year, all right? So I think 2017, 2018, 2019 were the most recent years. Obviously, Bitcoin has been around for already 10 years, right? But sometimes it's just hard to pull out that data because first and foremost, depending on what kind of platform you're using. So if I'm using Coinigy, Coinigy started only in 2012 or their 2013 company, so you don't really have that much back data. In fact, maybe they've been around they've actually been around lesser than that, but they were able to pull the API. I think it's a very young company. So it all depends on what kind of data. So what I would assume is that Bitstamp probably offered USD BTC USD option only back in 1st of August 2012. So that's kind of like how they can populate the data. So, but let's keep it simple. Let's talk about 2017, right? So in 2017, Bitcoin did a very stellar 1,409% return. So that means if you had invested, just $1,000, right, you would basically you would have 14x your money, right, just by putting in that $1,000. So 1,000 basically became $14,000. So it's quite straightforward. Then unfortunately, right, if you were to hold, right, you would have lost 73% of that 14,000. So kind of like that's what it means, right? So I think I think we all get the gist of it. We all understand the risk, the volatility, and especially with the fact that, you know, as markets mature and become more and more parabolic, occasionally especially, and within the year, you notice that there usually are cryptocurrencies, Bitcoin itself, going really ballistic and having crazy returns. But it seems to have kind of tapered off, right? Because right now the market cap is 300 billion. I think it probably dipped a little bit today. And when the market is more dense, it's usually harder to move the cryptocurrencies depending on where they sit on the large cap, mid cap to small cap, and even micro cap. Right, so this is kind of like where we're at the moment. We're at 300 billion in terms of market cap. Let's just round it off. I know it's a little bit lesser today. Dominance is probably anywhere from 61 to 62%, 63%. So that dominance also kind of helps you figure out whether it's more towards where the market is more favorable towards Bitcoin or more favorable towards alts. That's the purpose of the dominance. Now, how accurate is the dominance would depend on what kind of screener you are using. Now, the screeners that are out there would usually either include the actual real-time volume plus derivative volume. So derivatives are basically leveraged products that have emerged in the market ever since either 27, it should be 2018. Okay, so when exchanges became more in favor, where people started using exchanges a little bit more regularly, there's some level of trust that has been established. I noticed that there have been derivative products. So derivative products are basically synthetic products that are based on the underlying asset. So for example, Bitcoin is the actual underlying asset. It's the actual asset, right? But sometimes you may not want to have direct exposure. That means you don't want to deal with the downloading a private wallet. You don't want to own your own private keys. You don't want to have none of that hassle. You go through a brokerage firm or a trading platform that allows you to use US dollars to buy into a derivative product, for example, Bitcoin futures, to allow you to trade and invest in Bitcoin, but you're not actually able to own any Bitcoin. Neither are you able to transfer that contract out in any way. Okay, so that's an example of a derivative product. So back to the purpose why I was explaining that. Now there's so many people actually using derivative products or wanting to have exposure. Well, when I say people, we're talking about potentially institutions as well. We're talking about smaller, maybe perhaps higher risk funds or hedge funds wanting to have exposure either in Bitcoin, Ethereum, Litecoin, Ripple, and it kind of helps out on their alpha, on their portfolio as well. Because I hope I didn't smash anyone's, because just now the mic fell off. So, by the way, if my audio is a little bit iffy or it's okay, just comment in the chat, audio is okay. So, as I was saying, you want to try to identify whether or not how much of that overall market cap, is real volume, where people are actually buying and selling the tokens themselves in comparison to the actual total derivative market. So the derivatives are only available on the top cryptocurrencies that have US dollar tether or US dollar pairing or euro pairing. Usually the ones with the healthiest volumes. So far we have Bitcoin, Ethereum, Litecoin, EOS, Ripple, and of course certain exchanges, right? Certain exchanges have certain cryptocurrencies that they allow leverage or margin, right? With anywhere from up to 5x to even 10x for certain altcoin pairings. But this is against US dollar tether, nothing to do with the US dollars or any kind of foreign currency whatsoever. So, or fiat, okay, for simplicity's sake. So now that we have identified that, you want to kind of first identify that overall picture first, then you start narrowing down. Because I think when you eventually build a portfolio in this space, and obviously it's not for everyone, full disclaimer, I've been in this space since 2016, right? I bought my very first Bitcoin at $378, right? At a ATM in Chinatown, with cash. Okay, so that was my very first experience purchasing Bitcoin, and from there I was someone who was able to accumulate quite a bit of Ethereum in the 2016 to 2017 period before the boom. From there, the altcoin market actually started to flourish. I moved on to I started to trade altcoins, and I told myself that I think this space is going to eventually evolve to the fact that there will be asset management or portfolios that will be created around cryptocurrencies or digital assets. And here we are today in 2020. There is definitely more content, more companies, right? We're talking about finance related companies. Obviously, they're not accepting retail investors. They're only focusing on the AI or high net worth or institutions to create portfolios within the cryptocurrency space. I think a more prominent company would be under Barry Silbert, who actually has clients who are buying into Ethereum Classic and Bitcoin investments. The company that he runs is Grayscale, right? Grayscale Investments. So you can probably check that out. That is kind of like one of the first or the earliest. The other one is Mike Novogratz, who runs Galaxy, the Galaxy Fund, also very prominent. The other guy is Tom Lee, Fundstrat. So you can go and check out these three. These are the most prominent. Always Schilling and CNBC, Bloomberg are always kind of interviewing these guys. So you can kind of check it out. So you roughly get an idea. For the retail market, there is completely zero. You have basically no one to depend on, okay, except us YouTubers. And unfortunately, YouTubers are not financial advisors. I am not a financial advisor. I am just someone who just loves creating content with and within the crypto space for the community. So that being said, when you create a portfolio, I think it's always good to kind of strategize and put your money into a basket rather than all into one, right? We can safely say that through the years that we've been in this space, we have seen the booms and busts of various types of cryptocurrencies. For example, Quantum was a cryptocurrency that did very, very well in 2017, but did very, very poorly in 2018 and 2019. But in 2019, okay, it started to move relatively. It's starting to move back up. But is it anywhere near the all-time highs? No. But there are cryptocurrencies that have actually benefited through the years that they've been in the space, and in fact, from where they were when they first launched, they're actually above and beyond their all-time highs. For example, Binance has done exceptionally well in terms of reduction of its tokens. It has basically able to form a community, a very strong base of clients and users, and at the same time, they're always continuously building with other companies within the space. So they also have their mainnet, and I think their mainnet is going to obviously encourage more companies to build on top of their mainnet, right? So it can range from decentralized applications to straight up just listing on their listing onto their exchange, and of course eventually partnering up and of course helping and forming the whole overall ecosystem. So I think Binance is a very good example. There are many cryptocurrencies that I can just push off my head. I think there's OKX. OKX recently did exceptionally well. They suddenly cut their unissued token supply. So I think overall it was supposed to be a 1 billion. Okay, this is everything from the top of my head. As everyone knows, I'm someone who is not entirely structured. Everything is off the hip, as they say, or I shoot off the hip. But in terms of overall token supply, it was supposed to be, I think, 1 billion in terms of tokens, and they totally killed off or burnt the unissued tokens of 700 million. So that actually spiked the price very aggressively recently. So so from I think it was anywhere from 80 cents, maybe 80 cents to about I've seen the charts actually. It was from 40 cents to 50 cents back in 2019, and then that was back in January to March of 2019, and now it's already at $7.20, right? Because they are potentially launching their mainnet, but their mainnet will not be out until probably a few months down the road. So that's the recent latest from the grapevine, from the hummingbird that I kind of understood. So they are not ready yet. So a lot of the price that is going up recently has been also due to the fact that there has been a lot of momentum created this year. For whatever reason, some have been saying that it's because of Wuhan, money trying to transfer out from China through digital assets and out of the country. I think it's not entirely that easy anymore, but you know what? That's one part of it. Then another aspect was the fact that, okay, there is some resolution to the Trump and China, all right, USA and China trade wars has kind of eased, tensions have eased. So I think the market is slightly a little bit more bullish. The S&P, the Dow, the Nasdaq have already gone up. Then that bullishness also has probably translated a little bit to crypto. That's one aspect. No proof, but still one aspect, one possibility. The next is the halving that will be happening in May. So this halving would potentially cut down or reduce Bitcoin's overall rewards from 12.5 to 6.25. That in turn doesn't necessarily mean that the price should double, but in terms of overall costs, it is usually for the miners is still the same. So how will the market play out? Will the market actually be comfortable with the 10K or higher, or actually having a 12K and above, 12K and above, right? Because sometimes you got to ask yourself, if miners are going to have lesser in terms of the rewards over time, but yet the network is consistently and continuously growing, is it still favorable for people to hold Bitcoin? That is the big question here, right? And I really anticipate, and no one can predict, guys. I do not give predictions. I will not be able to tell you whether or not Bitcoin is going to go down to $3,000 or is going to fly to $30,000. I only react when it happens. So how do I kind of prepare myself? So let's get into it. So I think a portfolio should always, you have a baseline, right? You have a base of cryptocurrencies that you feel that are going to do well over a certain period of time. But you also want to have high alpha plays that can help you to build the ones that are going to be part of your long-term portfolio. So that way you are mixing the two. So why do you want to have the high alpha first? High alpha means high return on top of your baseline. So for example, you are someone who only buys Bitcoin. You only knew about Bitcoin. So that's your so-called baseline. But there are cryptocurrencies that can outperform Bitcoin. But then there are cryptocurrencies that cannot or underperform Bitcoin's performance. So I kind of want to give you that example first. So let's say we look at Bitcoin. So Bitcoin, if you held Bitcoin, let's just talk about $1,000. So the first year that you held in 2017, you did extremely well. Okay, and then after that, it dropped. Okay, it was down 73.17%, 73.17%. After that, now it's up 100%. Okay, so this is kind of like how, if you held Bitcoin, this is how your money would work, right? You made 14,000, you lost 73% of that. But then if you either you dollar cost average during the lows, and then now you are, of course, up slightly. So I think if you want to take a line, where is your portfolio at? You would roughly be about 689%. You see where I'm coming from? So if you kind of just shift that line, plus minus, you're at about 689% to 650%. This is just how it looks like. Now, if you want to compare that, you want to compare with a cryptocurrency that is within the same category as Bitcoin. You do not go and compare Ethereum and Bitcoin. It does not work that way, because these are two different things. Bitcoin is Bitcoin, Ethereum is a smart contract platform. You want to benchmark for Ethereum, for example. If you want to consider Ethereum as your base, right, it should be compared against EOS. It should be compared against ADA. It should be compared against any other smart contract platform that you can just think of. That's how you kind of categorize it. Okay, so now I'm just using Litecoin as an example. Now Litecoin did exceptionally crazily well in 2017, but take note that it also came down much more in the year of 2018 in compared to Bitcoin, right? So if let's say you had locked up some profits along the way, you would be in a very good position. But let's assume that you didn't and you held all the way. Okay, so right now, what's your overall ROI? Oops. So your overall ROI, let's say you just go for the full 3-year financial, you're only up 1,112% from your initial entry. Now, whereas Bitcoin, if you're talking about Bitcoin and you just held Bitcoin, okay, it is you would have done 686%. So in fact, holding Litecoin when it was back in January, of course, when you were in 1st of January 2017 until now, you would have done 1,112%. Whereas if you held onto Bitcoin, Bitcoin would do 686%. So you kind of get the gist. So that being said, when you do exceptionally well for certain cryptocurrencies within your portfolio, right, you got to identify, okay, and the most common thing that most people do in this space is, I want to get more Bitcoin. So whenever a certain high alpha play turns out well, you would either cash out or you would swap some of that profit, right, into a cryptocurrency that you want, which is in this case Bitcoin, right? So that's how most people have been doing it. It is quite straightforward. It's quite a no-brainer. But what you want to do is also take money off the table. As you do this through the many, many years that you're doing it, right, or at least you give yourself a number of years to do it, you will at the same time achieve financial goals, which is very important, because no point building all this paper profit, right, or at least digital virtual profit, and not actually realizing it. I think realizing profit is one of the most important things. So this is the part where, if we do go into that so-called new bull run, or at least the beginning of a new bull run, for whatever reason, okay, maybe great developments in the space, authorities or governments being a little bit more open, taxation being a little bit easier to manage, and maybe a little bit more friendly, which I don't see anytime soon. But I'm just giving you examples, right? The possibilities are there. It's just that it may not happen in the current state of the market. But I would say that in time and in the future, you would probably have that opportunity. But let's just say you've been doing it for a number of years like I have, okay? What I've done is just keeping it very simple. I keep my cryptocurrencies in less than 5 tokens, right? This allows me to strategically monitor and manage them from a performance base to a development and from their development and news, I can track very, very easily, right? Because this day and age, there's just so many tools that you can actually use to allow you to kind of track all this stuff. Now, I'm not the most organized individual compared to some of the folks that I've met out there, but for me, I keep things very, very simple. So my portfolio is always either 3 to 5 tokens. Anyone who has known me ever since I've started the channel in 2017, it's always just 3 to 5 tokens, until to the point that I don't even want to bother to come out and talk anymore. But every year I make it a point to have a high alpha play. Okay, so last year my high alpha play was ADA and EOS. So ADA and EOS was my high alpha play for 2019. Okay, 2018 I think I didn't have any high alpha play. Oh no, wait. 2018 my high alpha play was Huobi Pool token, and Huobi Pool token did a 8x for my portfolio, and that 8x has helped me substantially to build my HT holdings. Okay, now let's assume that, since everybody knows that HT is my baseline, where I have that as my foundation piece, or whatever you want to call it, that main staple or that pillar in my portfolio, right? So I have already made that and have already held that ever since the launch. So 2018, 2019, 2020 is still the same. I will not go into that, why I chose it and whatever. But now, Huobi Pool token has also moved up in terms of my ranking, in terms of allocation, and at the same time, it is also part of my staple already. So that's a given. Now, is that considered too much or high risk? Yes, it is, because it's all in one company. But I feel that at the end of the day, it's a matter of choice, because people can actually have all in on Bitcoin or have only Bitcoin. That in itself is also high risk, because if you want to compare that, but it's not as high risk if you have property, come a mutual fund portfolio and a bond portfolio, and Bitcoin is one of that, is considered a high alpha investment in comparison to your existing growth stock portfolio, for example, right? And you can't really benchmark it as the same because market caps are different. It is a totally different thing. But I guess you get my drift. So that being said, right, for me, let's say Hopi has been in with my portfolio, which it has since 2018, 2019, and now into 2020 as well. And I've only been growing my bags, over time. But the high alpha investments have helped me to add on, and I don't have to add on any of my own personal money. Now, the only time that I add in my own personal money is when we get periods like this, right? So when we get periods like this is the opportunity for me to buy. I usually never, ever touch or rebuy with fiat unless we have a significant correction. Now you must be thinking, wow, this is very difficult, Ryan. I'm looking at this market right now, and I'm afraid that I'll be missing out. Now, unfortunately, when you don't have a lump sum of money to work with, you have to do the next best thing, which is to do a dollar cost averaging strategy with the salary or your weekly pay or monthly pay that you have. There's just no two ways about it, guys. And you're probably wondering, okay, Ryan, so do I go in every month? Since that's the case, it's the most challenging thing. It's the most challenging thing to enter the market, especially when it's going up, right? Entering the market when it's going up poses quite a bit of risk, especially when you see the market trending upward very aggressively. Nobody likes to be caught at the top, okay? Nobody. So when the market is trending up so aggressively, it's a sucky feeling, especially if, okay, you look at it. Let's say I'm a salaryman, okay? I have my paycheck that comes every month. Okay, fine. End of the month, I buy I buy Litecoin, okay, at $45. End of the month, I buy Litecoin at $60, okay, and $77, so on and so forth, okay. So obviously, these two sessions will be one of the worst, but okay, so here's the thing. When you start kind of buying down as well, you're also averaging this price. You're averaging the overall price of your portfolio. Now, there are times when people go a little bit aggressive, especially at the end of year when they get their bonus. Because end of the year, so far, it kind of seems that end of the year seems like the okay time to always buy, and I kind of feel that that's a very good way. As you can see, December, you have a very low period. You have the December of 2019, also a very low period. So you know what? Sometimes, based on past performance, right? But obviously past performance is not an indicative of future returns. Maybe you just have to wait until the end of the year, then you can throw in more funds. That's kind of like how you arrange it. This to me was really an anomaly, right? Since that anomaly happened, we want to kind of discount it because we want to find consistency in the data that we pull. That is very, very important as well. That's why I'm saying a lot of people, right, the moment this happened, right, they gave up. They completely left the market. They don't want to talk about cryptocurrency. If their auntie or their uncle ask them about how's your crypto doing, sonny, they probably get a slap in the face, or they said, I don't know, man, I got really burned badly, grandpa, uncle, I did very badly. But you know what? If you give yourself more time, right, to really learn the market and experience the market, things will usually turn out better. And that's what I've been doing, right? I have been just in this space and observing, and it looks very promising, guys, because as you can see, it's going on a higher low each time, right? Higher low. So each time, sure, every year we have some kind of peak, and maybe this year, it peaks around here, and then after that we start going back down. But eventually, something will happen. It's either it really just, crashes really big time, okay, which I find very unlikely, but you're noticing that you're going to see a higher high each time. But the period of time that anyone can react seems to be very, very short. So as you can see, 6 months, and then after you have 1, 2, 3, 4, 5 months of a bullish momentum, and to have 1, 2, 3, 4, 5, 6, 6 and 6. So it's half. So it's practically half of the year bullish and the other half bearish, right? So will this year be kind of the same? Nobody knows. But the whole idea is to track the data for yourself. And when you have this dollar cost averaging strategy in place, I think it's really the safest. And I think anyone who is in my group, any of my clients who have been following me, who have been my loyal clients for the longest time, they all know dollar cost averaging strategy is most straightforward. It's the simplest, and it allows you to not have too much to worry. Why do I say this? If every month you're just putting in $200, okay, just $200, and that $200, right? It's not an amount of money that's going to be detrimental to your day-to-day living, day-to-day lifestyle. That means it's not going to cause you to be behind your rental. It's not going to cause you to be behind buying your groceries. It's not going to affect your kid going to school in any way. You're good to go. Seriously, you're good to go, man. Because $200, in my opinion, right, it's really small money, okay? But it's small money that people can afford to put into the market. Now I think anyone who is a traditionalist will say, why are you putting into this space, these shit coins that could potentially go to zero? Now my question is, do you think that these stocks that are in the stock market have not gone to zero? Let's just be very, very fair here. Throughout the 40 years that the stock market, I think it's been more than 40 years, that the stock market has existed, do you think that people have not lost their pants, have not committed suicide, have not lost millions, hundreds, millions, their life savings in the stock market? So don't come and be a traditionalist and purist to me because that shit happens in the traditional financial market. Now I'm done with my tilt. Let's continue. So anyway, this whole space to me has a very promising future because I clearly see the developments in the space. I clearly see the emphasis, the licensing coming from various countries and governments coming together, forming unions, companies that are thought leaders in the space coming together to form councils. Look, man, if this was a pure BS space, why go through all that effort to do things right? Why go through all this effort? Sure, some may say, all right, you're here to scam the market, you're here to capitalize on the noobs. That is true, completely true. But there are companies that have listed or at least are attempting to list and have shown zero to no growth in their companies and have not been profitable for a number of years despite the fact taking many rounds of private equity, taking many rounds of private placement and have failed to deliver and truly has a poor valuation. In fact, we're talking about losing millions to billions. So everywhere is the same. Everywhere is the same. Unless it's an existing proven asset class, then okay, we have nothing to talk about. Okay? We can go on, guys. We can talk about gold and silver, right? That is very scarce. But you know what? In the meteors or asteroids in the universe, right, that are floating in the universe, there are millions to billions to trillions, multi-trillions in terms of valuation when the astronauts or the NASA folks have scanned. And yeah, there's a lot of diamonds, platinum, gold, silver, precious metals floating in these asteroids just waiting for someone to be able to drill and bring those precious metals back. And then what you're going to tell me? The price obviously will drop, right? But obviously if it stays there and it becomes its own economy in space because of the difficulty of bringing it back, okay, then everyone is safe. The people who have invested bucket loads in gold, silver, platinum, any kind of precious metal will be so-called safe. But if you know this piece of information and you know that it's wow, okay, there's trillions. Yeah, go and check it out, guys. I'm not making it up. So there you have it. This whole discussion about us being in a shitcoin space, I will take my chances. Because like I said, with proper risk management, and you taking out funds occasionally and rebalancing your portfolio, you can live in a nice house, own multiple properties, and still put your kids through education. If you do things right, any asset class can do that for you. There are people who have done really well in the Magic the Gathering space, which I'm now part of as well, right? They have been traders. They only know about Magic the Gathering. They never ever touched the stock market, and they only accumulated Magic the Gathering cards. And along the way, they have been buying and selling, or they have such a huge collection that as they sell, they start paying down their mortgage. They start, being able to travel more because they now have more surplus income. Anything is possible, guys. So don't be such a narrow-minded twit, right, or goldfish that you only can see what's in front of you. There are certain things that are just beyond your comprehension. And yes, of course, there are people who say Bitcoin could go to zero and smash this whole space. But until that happens, and that becomes an actuality, I'm still going to be putting my money in. I still am going to be cashing out occasionally as well on my high alpha plays. That's just the way it is. Nothing is going to stop me from doing that, right? Look, guys, anyone who has known me known that I have made my fortune here. Okay? So if people like myself, who is an old fogey, right, can make their fortune here, and I've heard so many success stories of youngsters putting in a few $100, making it to a few $100,000, $1,000 becoming $1 million, then that's proof already, right? Whether is it sustainable or not, let time do its thing. Don't be such a wet blanket. All right, guys. So anyway, that is all I have to say. Yeah, I'll see you in the next live stream, guys. And obviously, you want to load smartly, manage that risk. Don't go all in just because someone said so. Do as much research as possible. Identify your risk profile. And last but not least, of course, if you like, please click and subscribe to the channel and give this video a like if you felt it was helpful. If it's not, just give it a thumbs down and see you in the next live stream. See you guys.